$667,317. That is the average sold price for a Canadian home across the country, which is up 34% from only 5 years ago in 2019. And despite having come down quite a bit from the highs reached in 2022, the housing market remains challenging for many prospective buyers, where even with recent price corrections, affordability remains a significant concern as rising interest rates and limited housing supply continue to put pressure on the market. The reality is that the Canadian housing market's been in a tough situation since the pandemic hit the country by storm, creating long-lasting socioeconomic impacts on the Canadian economy, with multiple elements weighing in on the future of housing in this country. Interest rates, immigration, supply and demand, employment levels, cost of construction, these are only a handful of the issues that have turned Canada's housing market from one that was attainable and affordable to working Canadians not 10 years ago to a market with a bar set so high today that many Canadians now find home ownership increasingly out of reach, creating a housing landscape defined by affordability challenges and growing disparities. Let's talk about it. All right, so one of the challenges with Canadian housing from a federal standpoint that's often overlooked is just how vast the country is, with entirely unique housing markets across different provinces and even individual municipalities that operate all independently, of course, and face distinct challenges, where this geographical diversity makes it very difficult to implement these one-size-fits-all policies. In fact, it's impossible to do downright, as each region requires tailored solutions to address its specific housing needs and market dynamics. That being said, Canada has roughly 10 main housing markets spread out across most of the provinces, with each of these cities facing different challenges to tackle their own housing issues. However, the main issues remain permitting and construction timelines, in parallel with increased demand pressures that tend to permeate across all of these major markets alike. Now, while it may be tempting to blame newcomers for driving up housing demand, the issue is of course more complex than what initially meets the eye. However, immigration is undeniably a large factor contributing to rising rent prices and home prices, as an influx of new residents has led to increased competition in the housing market. That is just a fact. And this surge in demand, combined with limited supply, inevitably drives prices higher, a basic principle of economics that I learned in my freshman year of university. In fact, although a difficult topic to discuss over the past several years, as talking about it puts you in social hot water for some reason, well, I've continued to discuss this situation on the channel, and now a couple of years later, once a lot of damage has already been done, unfortunately, lo and behold, the Canadian government is retreating from its stance on open border immigration policies by rolling back Canada's foreign worker program, which, for the record, has been recognized for aiding Canada's recovery from the pandemic, but has also been increasingly blamed for contributing to housing costs, strain on the healthcare system, and rising youth unemployment. And to put this into perspective, since January 2018, Canada has welcomed 1.63 million new citizens, with nearly a third coming from India, the Philippines, or China. And in 2021, migrants as a whole made up over 8.3 million people in the country, accounting for almost a quarter of Canada's population, which is undeniable data towards the housing market supply issues. So let's talk about that a little bit more. The CMHC, or Canadian Mortgage and Housing Corporation, has stated that considering the current state of the Canadian housing market, we would need to build roughly 3.5 million homes in order to regain housing affordability by 2030. Now, what does it mean to restore housing affordability by 2030 though? Well, the CMHC defines this by the percentage of household income required to purchase a home, quite simply, where affordable housing means a much smaller share of income would be needed, whereas unaffordable housing demands a larger portion of most individuals' take-home pay. And the goal is to bring housing costs down to a level that is more in line with what they were in 2004, almost 20 years ago, which was way before prices began to soar in the first place. And to give you some visual context, back in 2004, here's what home prices to income looked like, where these two values values mostly grew at parallel before house prices went parabolic relative to income after around 2005, and even much worse, of course, after the recent pandemic. But the question is building 3.5 million homes by 2030 even in the realm of possibilities? Well, the short answer is no, but to provide some additional context, this report had come out back in 2022, meaning 7 years through to 2030. So 3.5 million homes means 500,000 homes per year. And if we look at historical home values, we can see that we've been nowhere near the required amount of housing starts and completions, for that matter, to achieve the CMHC's required number of homes by 2030 for that restored affordability. In fact, the highest level of starts that we've seen in recent years has been 271,000 in 2021, which is half, roughly, the amount needed per year to restore that affordability according to the CMHC. And that's even despite seeing 337,000 completions that year, with values having come down as higher interest rates make it just more expensive for builders to build homes. Now, what's also interesting to look at is the types of constructions that are being built up, which gives us a picture of how the Canadian housing market has evolved to accommodate such a rapid spike in population relative to current population size. So in 2021, of the 271,000 new housing starts, 189,000 were for multiples, meaning multifamily properties essentially. So this means that 70% of new construction in Canada are apartments essentially designed for renters, which isn't a bad thing for the current problem at hand, but limits the amount of actual homes, or long-term homes, I guess we could call them, in the country, thus making single-family, semi-detached homes and even row homes that much more scarce and in demand, thus driving up prices further in the future when renters inevitably want to move out of their apartments and into longer-term homes. So let's talk about how the housing market could play out in the shorter term though. So as it stands right now, sales volume has been steady across the country for roughly 2 years, ranging between 35,000 and 40,000 transactions per month. And this is despite average sold prices having varied quite a bit, but increased in that same time frame nonetheless. Now, in parallel to this, interest rates remained steady at 5% for most of these past 2 years, having now come down by 75 basis points as of this week. It just came out this week that the Bank of Canada lowered interest rates by 25 basis points as expected, and this is with the Bank of Canada very much being expected to continue cutting rates further at every rate meeting through to 2025 as inflation has come down quite dramatically and the Canadian economy needs a boost that lower rates would bring. However, lower interest rates also means increased purchasing power for buyers once again, which, as we've seen previously, the data shows that sidelined buyers are still very much eager to buy, but have just been waiting for rates to drop to make monthly payments more affordable when making a purchase. So although the 75 basis point drop to date hasn't done all too much to revive the market, well, another 25, another 50 basis points by 2025 could very well be that further catalyst needed for a larger portion of the population deciding to jump back into the buyer pool, sparking an increase in demand for homes once more. That said, although economic principles point towards a renewed increase in home prices, I'm not sure the Canadian population would really be able to bear increased home prices even further, and that's despite lower interest rates, as Canadians are increasingly faced with financial hardships to pay for monthly expenses, quite simply. So all of this to say, in the face of upcoming rate cuts and continued strong demand for housing in Canada, the future of Canadian housing remains a difficult one to predict, as there are so many factors impacting both supply and demand. What is certain though is that single-family homes are and will continue to become even more of a rare and expensive commodity to own on Canadian soil, while most metropolitan areas continue to become densified with multifamily properties and apartment buildings. So what are your thoughts on the Canadian housing market, considering that we're now in a period seeing interest rates starting to drop, as we've spoken about and predicted for a while now on the channel that would happen right about now in the second half of 2024. Make sure to leave a comment down below. And if you want to learn more about real estate investing or homes in general in Canada, make sure to check out the other content that I have on my channel, as well as checking out my stock market investing course over on Skillshare that is completely free for you to watch. It has over 7.5 hours of content and nearly 3,000 students on there, which is absolutely insane, but you can check that out using the link down below in this video's description. So with that said, thanks a lot for watching, and I'll see you in the next one.